cap index, which is unchanged as well. 60 points lower, 59,190 is where we are starting. So this is a bit of a flattish start after what has been a furious move yesterday, of course, especially yesterday, but even over the last many trading sessions. 20 points lower. The Nifty heat map up on your screen, it's more down than up, but not by very much. Asian Paints on one end. Nestle Max is something which Nimesh was highlighting. It's there up there amongst the gainers. And on the downside, as Rima has been saying, you've got IT, Infi, Wipro, and there's HCL Tech as well. Rima.
Well, as you pointed out, it's IT on the way down. The Nifty IT index has slipped more than about 0.5%. Wipro is the big casualty today. Stock down 4% at open. It slipped below the 50-day moving average. Wipro now down down to levels of 243. Year to date, it's lower by 20%. HCL Tech under pressure. Tech Mahindra, Infosys also weak in trade, and TCS is losing ground in sympathy. If you track the performance of IT so far this week, broadly lower. This is the week where we got all the big numbers from the IT majors. Week to date, Infosys down 4%. TCS is down 2.5% and Wipro down over 2%. So despite a slightly better showing versus expectation, IT continues to remain under pressure and still a bit unloved. Eternal is also losing ground. Eternal is down close to about 1.2%. But this comes on the back of the stock being virtually at record levels 2 days back. And since yesterday, even yesterday, once the numbers came out and the street digested that the jump in numbers was an account of the change in the business reporting. They've moved to an inventory-led model versus a marketplace model, and that explained. Otherwise, the numbers were okay, but the stock is seeing profit booking 1.9% lower on Eternal, but the brokerage view remains quite bullish. CLSA has a high conviction outperform, target price 450. HSBC has set the target price at 390. Adani Ports, Ultratech Cement, ONGC are some of the other drags in the large cap space. But on the way up, it's consumption all the way. Nestle, big mover yesterday, 4.5%. It's followed it up with another 2.5% gain, so continues to be bid up. Asian Paints is rising. HUL is gaining, and Reliance Industries also seeing buying ahead of numbers later today.
Well, that's right, Rima. A limited point with regard to Eternal. The stock was very volatile yesterday, but I think one comment that came in for the management, that break even is not even a milestone at this juncture, implies that they're focusing more at growth. And maybe the near-term investor may not be too happy about that. And that explains why the stock is down close to around 3.5%. Mind you, longer-term story looks good. They're guiding for very, very good growth, good turnaround in terms of profitability. But that explains why that stock is under pressure in today's trading session. Moving to a few more names. Rallis from the broader markets, that's catching your attention. So that's a positive earnings reaction that we've got out there. Stock up close to around 4%. Add to the list, I think, we should get a couple of these other names. Vikram Solar, yes, that's the other one that I was looking at. That as well is higher in today's trading session, reacting to a positive set of numbers. Vare actually opened with gains and then that got sold into. So that's the other stock, in fact, that's now flattened out after opening gap up with a gain of around 2%. What else is giving Wipro as well as Eternal Company on the downside? JSW Infra, well, that stock is down close to around 3%. Z Entertainment as well, they were guiding for very, very good times ahead. However, just going by what they've done at the half-year mark, doesn't seem like that guidance could be achieved. So for the time being, after the stock dancing away to around 145 earlier this year, the stock has come in for some selling pressure.
Well, I think, Nigel, you got slightly sideways kind of start, right? So neither here nor there. So can't really put this as a bad start, neither, of course, not a good start. So somewhere in between. IT, I think the Nifty IT index should come up, and I think there will be some pressure. Coforge, for example, which is still not reported, but which is widely expected to report something like a 5-6% kind of growth, is down 2%. But it's, Wipro, HCL, etc., which are taking a bigger bite out of prices. Swiggy is down 2.25% as well. So that's another one, which I just want to highlight. Ather is down 1.5%. Z, of course, results 3% lower. JSW Infra, 3% lower. That's results. Tata Com has had a very, very sharp move. In about 5-6 days, it's moved from 1,600 to 1,950. So Tata Com is taking just a breather. That's it. I mean, the top volume-led stock, or not stock, but, ticker is silver. Yeah. Silver Bs are up 4%. And that's by far the biggest volume-led gain. And we have it. It'll come up on your screen, Silver Bees, if we can. So this breathless rally in precious metals, on and goes. 4% on gold. Silver, of course, on the coattails of what gold prices are doing, and so on and so forth. Look at Share India. My God. Oh, boy. Share India, 194 rupees. It's a broker, basically. But the stock will come up. I think we have the stock. 2 days back, stock was $130. It's 190, 195. And volumes yesterday were some of the highest we've had in Share India in a long time. And today as well, it's by the way, the third biggest. I'm just mentioning it because it's the third largest volume-led gainer on the NSE. Never comes up with this much volume at this point in the day, but it is. So just thought I'll make a quick mention of it before we move forward. So that's what's coming on. Well, Hiren Ved is with us. He's Director and Chief Investment Officer at Alchemy Capital Management. Hiren, good morning. Happy Dhanteras, happy Diwali. Great to have you with us here.
Season's greetings to everybody.
Yeah, I should ask you, how's the traffic? I mean, I got out yesterday.
No, today was very easy.
Yeah?
Yeah,
I think the evenings it gets a
evenings is a little tough. Yeah. I guess
unless people have started the Diwali holiday already.
Diwali kids out of Bombay, in Bombay.
Out of Bombay.
I think people are visiting, and it's just that festive mood, right?
Yeah.
And it's still raining. Yesterday in the evening, it was raining in some parts.
Oh, is it?
Yeah. I mean, how is the market looking, Dhiren? What's the? Actually, let me ask you straight up. क्या लिया? ये अब तो दिवाली है, दिवस है, तो कुछ बताइए.
Well, we were all fully invested, so but I think broadly we've stayed with the same themes that we've been carrying on for many years. But I think incrementally the only thing we've done is added a little bit of autos.
Yeah.
Because I think it looks like that the cycle is now, after a very long time, the cycle is turning. So, combination of interest rate cuts, easy liquidity, GST cuts, finally is getting the mojo back.
But two-wheelers?
Both, two-wheelers, four-wheelers. I think...
Some dealers we were talking to, they were kind of saying that with four-wheelers especially, is that GST boost durable? I mean, or by November, by December, again, you're going to get into that inventory build-up kind of situation. Two-wheelers maybe, because the impact is more.
I think two-wheelers definitely has got off to a very good start. Four-wheelers, at least for now, looks like that things have started to move. I think after a long time, we are seeing, we even read that small cars, which were not doing well, are starting to do well. So clearly at the lower price point, things are beginning to, improve. But I think overall, auto should do okay. Typically the cycle takes a long time to kickstart. Once it kickstarts, it at least lasts for some period of time.
Hiren, good to have you in the studio and welcome and festive greetings to you, your team and everyone at home as well. Interestingly, you spoke about autos. People will be saying last year wasn't a good year. For you all, it was a very good year. One of the top picks, I think, was Force Motors.
Yeah.
Out of nowhere, that stock is up 100%. And now you're talking about the lower end. But I think the Force Motors play was on premiumization, use across, tourism or various other verticals as well. Any comment out there? Because that's had a great run. The auto index is catching up in 2 months. This one in the last 1 year, I think it's up 150%.
Yeah, I think it was more of a bottom-up pick rather than a pick on auto as such for us. It was a stock which was long forgotten by most investors, They don't talk to anybody, etc. But I think if you look at the kind of products they have, the new Urbania is phenomenal, right? And our dealer checks suggest that there's a lot of demand. Both from tourism, whether it is from the healthcare ambulance sector, and more recently from the GCCs that are being set up, right? So that's a nice little van which carries 10 to 12 people.
I've used it. It's fabulous.
It's fabulous.
Yeah.
I think the other less understood aspect of Force is that they also make engines for BMW and Mercedes.
Yes,
right?
So it's a play.
So that's a great way to play premiumization in the car business, right? So And then they have a joint venture with Rolls-Royce to make engines for exports. So I think it's a great engineering company. So you could play both premiumization plus, Gurkha, the four-wheeler.
Defense orders also.
Has found some place in defense. So it's a very interesting pick. It was, it was kind of out of the woodworks. Nobody was looking at it. Numbers have improved. So yeah, I mean, that's played
Still
out
positive
quite
out there.
Yeah, I mean, typically we take a fairly long view on many of these companies. But again, a clear disclosure that we and our clients, we do own Force in our portfolios.
I think you've spoken, when we last spoke to you, you spoke about NetWeb.
Yeah.
I think that's a stock. But this time, just wanted to get your broader thoughts on IT. I mean, are you getting some signs that, after being unloved, after underperforming so much, do you think the tide is turning? We were just chatting with Bhavin Shah, and he said that, maybe growth can now move from low single digits to mid to high single digits. Plus, you throw in the free cash flow yield, and maybe you can make a case for a 10-12% kind of a return in IT stocks.
Yeah, I think anyway, expectations were very low, right? And I think while absolute growth is nothing great, but compared to expectations, I think things have been better. So whether you look at LTIM numbers, Persistent, for example, has done relatively better. So it looks like that the sector may be bottoming out, right? We still believe the large cap stocks can probably give you late single digit, early teens kind of returns.
Okay.
Right? But yeah, I mean, there is safety, there's cash flow. But it looks like that the sector looks like bottoming out now.
So do you want to quickly tell us the IT stocks, the services plays that you have?
So I think for the longest time, we've owned KPIT.
You spoke about that.
So we continue to own that. We continue to like the company. I think we had a soft patch in the first half of this year and all of last year. But looks like that hopefully this quarter should be the last of the soft quarters, right? And I think things from there should actually bounce back. And the other one is that, we have an exposure to a company called Latent View, which actually is a derivative play of AI and machine learning. They do a lot of data analytics work. We think which is a precursor. I mean, as AI spending moves from the infrastructure layer to the software application layer, I think a company like Latent should do phenomenally well. But again, we own both these companies, so full disclosure.
KPIT and Latent View.
Yeah.
What's the new thing? Could yeah, I'll leave it at that. I have a few questions, but I'll leave it.
Nothing really new. I mean, I think broadly, as I said, that we had our areas where we're clearly growth investors, so we look to in whichever sector, wherever we think that we have quality companies with above average growth potential over the long run is where we are positioned, right? So we are not necessarily trying to do any stuff which is very contrarian, at least from our point of view.
IPOs, anything interesting, which have come recently listed, some have listed below the issue, and then they've gone on to do well, that kind of stuff, anything which comes?
No, I think the last we participated a little bit was in a very small company, but we like it, is a company called Europratik, right? Okay. So in the building materials space.
Okay.
We think that's quite interesting. I think LG was very interesting, but it's kind of opened with a
50%.
With a bang.
Yeah.
So I think many of these companies, I think Urban Company and LG were good IPOs. But I guess there's a lot of optimism right now immediately after listing. So we'll kind of let it simmer for a while. And at some point in time, when we get a good entry point, we'll certainly look at some of those.
All right. Hiren, what about gold? What's the view on gold, first of all? Do you think it's running a little too quick? If you're allocating fresh money, what would be the split, between gold as well as equity as of now? And do you think there's another way of playing gold, maybe the financiers or the likes? I'm not sure if you want to give us a view out there.
So, again, I'm not an expert on precious metals, right? But I think gold's done phenomenally well. I mean, we all have discussed there are several reasons, geopolitical,
Central bank.
You know, so on and so central banks buying. I think the way we've played the precious metals and commodities is by investing in MCX.
Oh, okay.
I think for us that was a more interesting way of
In a very profitable way.
and a very profitable way. It's a platform, you know, an exchange is like once your fixed costs are done, as volumes grow, everything flows to the bottom line.
Yeah, I think the MCX rally really started a couple of years back when they introduced options, right? I mean,
Correct.
That's the-
So I think until recently and even today, like a lot of the volumes were all futures.
Correct.
And it's really when options started is when the volume started to improve dramatically, right? And today you have the three most traded commodities where they are a clear market leader, right? Crude oil, gold, and silver. I think there are a lot of interesting products that they are planning to launch. Like if in today's day and age, if they can launch a 1 kg silver contract, I think that would be a big hit, right? So there are a lot of products which are at the approval stage. I think as and when they get approvals, I think we should see a fantastic.
And unlike
kick in volume.
stock exchanges, NSE, BSE, MCX is no second in that sense so far, right? I mean, no real.
Very difficult, you know, once you build
Yeah.
a leadership position.
Yeah.
I mean, NCDX tried a lot, but they just couldn't do anything. I think MCX has now created that ecosystem. Very difficult to disrupt an ecosystem like that once you have buyers and sellers on both sides, right?
What about capital market plays? You know, everyone's talking about us having this long runway. Stocks ran ahead of themselves. Some of them cooled off. Interested in that theme? You know, a few of these themes I wanted to ask you about. Capital market plays, you know, EMS as a space, and maybe the platform themes. Among the three, since all of them
We
have
like all three of them.
All three of them, okay.
Yeah,
You want to name a
because-
couple of stocks? Will be great. Let's go for it. It's Diwali.
No, I think I think in capital markets, as I said, we own exchange.
Yeah.
You know, clearly MCX is a great play there. We do own some asset managers and wealth managers, right? So we like the entire theme. You know, we do believe that there is a structural long-term play, and that's also led to valuations getting re-rated in that area. So, you know, our sense is that we like the business models because all of them have great operating leverage. So whether it's a asset manager, wealth manager, or an exchange,
They'll do well.
right? So I think they will do well. So we have spread our exposure across all three, right? You mentioned platforms.
Yes.
Clearly, I mean, I think you have to be selective there, but you know, we do have exposure to Paytm and Eternal, right? I think those are the two platforms that have demonstrated that they can not only scale but also achieve profitability.
Yes.
Right. But I think they're still, you know, they're still on their way to achieving greater profitability. I think they have to strike a balance between growth and profitability. So I guess if you want dominance, then you have to focus on growth first, and eventually I think profitability will also come in.
All right. And EMS?
Again, it's a sector we like. Obviously, valuations are quite challenging now. And it's a sector we've been owning for quite a while now. It's not now. I think it's been a couple of years since we've been having an exposure there.
Okay.
Again, we have the whole range there. We have an exposure to Dixon. We have an exposure to, you know, to Keynes, as well as recently, you know, we do have exposure to some other names as well, like Sirma.
Okay. All right, Hiren. Good to have you in the studio. Thanks a lot for coming down.
Thank you, thank you, thank you.
And giving us a few ideas, few themes as well. Wishing you, family, team, all of them a very, very happy Diwali. And we look forward to catch up rather soon.
Same to all of you and to the viewers of CNBC-TV18.
Thank you. Thank you very
Bye-bye.
much for joining in. Getting back to stock-specific action, it's Eternal in the spotlight. Manglam joins in with a brokerage view.
Well, there was a mixed quarter that came in from Eternal this time around. There was good strength in the Blinkit NOV, but more importantly, there was some moderation in the food business NOV. Even though the revenue was higher on account of better take rates, the margins expanded a lot lesser than what the street and the company, both of them, anticipated. And that's what brokerages are, summarizing as well. While they are positive still on the prospects, CLSA still maintains their high conviction outperform and a target price of 450 rupees. They believe that much stronger than expected, net order value for Blinkit and much higher contribution for food delivery was good. But Blinkit adjusted EBITDA was lower than expected, largely due to the pace of customer acquisitions. HSBC too, they've written they have a target price of 390 rupees on the stock. They're saying food recovery remains slow despite increase in spends for the customers. Quick commerce margins disappointed due to heightened marketing and expansion costs. And valuations are not undemanding now, though stronger quick commerce industry tailwinds and superior execution keep them, positive on the stock. So that's why they have a buy rating. Nomura too, they call it a mixed bag. They're saying that the food delivery business was marginally below expectations. However, they do expect net ordering value to actually grow by 15% in this year and sustainably at 20% once the consumer sentiment turns. So now all you got to wait for is the consumer sentiment turning in the food delivery business and some sort of margin expansion coming by or loss reduction happening in the quick commerce business.
All right, Mangalam, thanks a lot for giving us that quick take on Eternal. Well, let's go focus on Big Boy Reliance. We'll be reporting its quarter numbers. Sonal is here with the key expectations. Sonal?
Well, a good quarter is expected from Reliance Industries this time around. Remember, the stock has been flat in last 1 year, trades at 21.7 times FY27 earnings. If we talk about a quarter-on-quarter number, it is expected to see an improvement. Revenues to come in at 2.46 lakh crore rupees. EBITDA expected to increase by 4% to come in at 44,511 crore rupees. Margins expected to expand as well to 18.1%. The profits, they will decline 22% on a quarter-on-quarter basis. But do remember, in the base quarter, there was a one-time income of 8,924 crore rupees because of that stake sale that happened in Asian Paints. So optically, number will look lower on a quarter-on-quarter basis. Now, what are we watching out for? Growth this time will be led by the oil to chemicals business because cracks have improved across products. Also, retail growth because of some GST cut impact that we'll see, and revenue per square feet will see an improvement on a quarter-on-quarter and on a YY basis. There could be some weakness in the oil and gas business because of some pricing issue. However, if we talk about the Jio number, Jio's EBITDA is likely to surge 16% on a YY basis, 2% on a sequential basis because of higher ARPU that came in because of the tariff hike. Retail EBITDA expected to grow by 11% on a YY basis. If we see the trend as well for EBITDA, this time around expecting a multi-quarter high EBITDA led by the oil to chemicals retail business. So watching out for those numbers today.
Sonal, thank you very much for that. And that's going to be the big one, right? Later today evening when they report numbers. Well, we want to focus on one of the prominent capital market companies now, which are in focus. I'm talking about Angel One. Now, Angel One reported numbers for the second quarter and revenues came in slightly softer, profits largely in line with expectations. We have Ambrish Kenge, Group CEO of the company, now joining us to talk about all of this. So just three things, as we always do before we go across to management. Second quarter results and outlook is something we'll focus on. They're taking a price increase, so expectations on with regards to volumes post this price increase and insurance, allied opportunities, wealth, etc. What's the picture there? So lots of stuff to talk about as far as Angel's business is concerned. Ambrish, good morning again. Thanks very much. Happy Dhanteras, happy Diwali to you, your loved ones, your team at Angel. Thank you for coming on.
Good morning, Prashant, and thanks for having me here. Good morning to, happy Diwali to you, Rima and Nigel. Good to talk to you again.
Absolutely. Ambrish, I'll get to the numbers in just a bit, but I think as we've done for the last couple of quarters, and pardon me for that, there is just so much attention on not what is in the bag, but what can perhaps happen. So maybe it's a little unfair to ask you, but I'm going to ask you anyway. So humor me. What have you heard with regards to this? We put out a couple of stories recently. Our colleague Yash has put out stories where it seems to suggest that with regards to the weekly options product, the thinking perhaps has maybe undergone slight change. I mean, maybe it's evolving, but at one point it was looking like they were going to come down hard with a hammer, but doesn't look like it now. There was that consultation paper which was supposed to come out. So just anything you can tell us in terms of where this is at, what you've heard, have you been asked for any data, any views, would be very helpful, Amrish.
Yeah. No, Prashant, look, I mean, everybody's kind of looking at it because, any regulatory stuff people are interested in. Look, we haven't heard anything from the regulator in this regard. Really, what has been out there is in the public domain. And it looks like some of the news that you have broken out, you may have more news on this. Our approach to this is, we have to focus on what we are doing, keep executing on it, keep serving our customers. But really, I haven't heard anything on either the consultation paper or we haven't been approached with that at all at this time.
Yeah, there's another story this morning, right? Because there is so much interest around this. I mean, it kind of sort of goes to the heart of to market action volumes, etc. There's a Bloomberg story which says in India, SEBI to upgrade HFT rules to ensure fair play. SEBI to prioritize deepening India's cash equities market. So, I mean, the second bit, to prioritize deepening India's cash equities market. I mean, I thought that was interesting, but we'll see as and when things happen. Tell us a little bit about this price increase that you're taking, Amrish. What prompted it and any implications off of it once it goes into effect?
Yeah. By the way, I mean, I know you didn't ask me that question, but since you you kept that thread open on the cash market, I think deepening the cash market is overall a good thing. I think it will sort of deepen other markets as well as you deepen the cash market. On the price increase, really, it is not a real increase. It's really bringing it in line, making the pricing simpler. What we had different pricing for intraday and delivery, and now we have made the pricing same across the board, and that does create some uplift in the bottom line, but the real purpose was to make pricing simple.
But does it give a bit of a lift in terms of pricing overall?
Look, it does give a lift. It does give a lift in terms of our revenues, and most of it falls down to the bottom line. It will be about maybe 50 to 60 crores. We talked about that yesterday on our earnings call. It'll be about uplift of 50 to 60 crores that falls down to the bottom line PBT directly.
All right. Hi, Amrish. Good morning. Good to have you on the show. This is Nigel on this side. Well, I just want to focus on that F&O broking side of things. It accounts for, I think, around 45% of your revenue ballpark. What percentage of this comes in from weekly expiry trades?
Look, yes, it's about 46%. Broking is 46% of our revenues. I don't have this handy, and it's kind of hard to calculate what comes out of it. So I don't have that breakup ready for you there. But in the end, actually, a large part comes outside of the weekly expiries because the expiry days are smaller than the overall days. But I don't have that breakup for you.
No worries. All right. Let's focus on a couple of aspects then. How do you see the margins trending from here on? If you could give us a number, ballpark, what should be the range? Because client acquisition is going to continue. You'll be putting in some more advertising cost as well. But what an impact will it have on margins? Keeping in mind that you have taken a price increase, so that will cushion some part of it. Targeted margin band. And also I wanted your comment on the market share. Because, though the market has been a little bit of a lull, but you seem to be gaining market share. At least that's what it suggests on a quarterly basis. So tell us more.
Yeah, no, Nigel, good question there. On operating margin, we have kept the same guidance. We expect to exit the year with 40 to 45% OPMs, operating margins. So that guidance remains, and we are pretty confident that we will get to that margins, because you've seen our revenue, this quarter, if you see, the PAT grew 10% quarter over quarter on an adjusted basis. On an absolute basis, it grew 87%, but we take some, if you adjust for IPL expenses, other things, it was about 10% PAT increase. Revenues also went up, net revenues went up by 5 to 6%. So we are continuing to show that increase. So we are pretty confident that that will happen. On the market share, and that's the important part, like if you see this quarter, I felt it was a really strong quarter because you had sort of, remember last time when we were talking about it, the Jane Street stuff had just happened. we've had all these wars. ADTOs actually have gone down. If you look at quarter over quarter for the last quarter, in spite of all of that, we've shown a strong quarter and increase in our revenues. Market shares actually quarter over quarter. If you look at cash as well as F&O market share, they've gone up by about 70 bips. The commodity market share has gone up by about 800 bips, but that's aberration. So if you look at year over year, they are about 300 bips increase. So I think we are performing well. Our focus is on giving the customers the best experience we can give, the best products we can give, the best platform we can create. And then I think rest of it just takes care of itself. And market share is really important because as things turn around, like last quarter, FIIs were really negative. Now, as all of that turns around, if you have a good market share, the tailwinds actually help you. So we really focused on giving a great experience and having a good market share there.
All right, let's focus on the optionality value as well, which could add value for shareholders as well. Tell us about the new Angel One Live Well Life Insurance. I think you have minority stake out there, 26% odd. What's the opportunity size out there?
Yeah, so they're into, they'll be into insurance manufacturing. They are a player who have international experience. They have some really good technology where, the face scan technology that can help. They are also a player which is very digitally oriented. We are also very digitally oriented. So there's a really good synergy there. So far, I think if you look at it, life insurance is really large in terms of how it's sold physically. We think there is scope to sell it digitally, and with this kind of a venture and us having a large base of consumers, them having a really good technology, and that combination we think is really good for the consumers also. With GST, some of these rates will come down as well. So I think long term, this is a really good prospect. These are all things that you're seeing from us, Nigel, where we're sowing these seeds, and a lot of these will actually germinate and create big trees, we think.
Yeah, just one, Amrish, on this massive rally in gold and silver, right? And I think you have a fairly healthy market share, although I think the market share there dipped a little bit in the month of September from a very high level. Could you tell us what is the sustainable market share in that segment, and what has this rally meant for you in terms of volumes on that side?
Look, we report commodity market share as a whole. We don't report specific commodity shares inside of that. Month-to-month variations are very hard to predict, Prashant, because what you see reported is not just a factor of what our volumes are, but what the composition of the commodities is. If one commodity goes up and let's say we have less market share, then suddenly you'll see that share drop. If another one goes up, we have more market share, you see that go up. So I won't read too much into month-to-month variations. The silver and gold going up, is overall sort of, I think volumes have gone up, but market shares will depend on, again, we'll see how that shows up in October. They depend on the composition of the commodities. But what you will also see that more players are entering and expanding this market. So what you might end up seeing that the market shares may change, but overall, I hope the market expands, and that I'm seeing a bit of that already.
Amrish, always a pleasure talking to you as well as the entire team at Angel One. Appreciate you joining in. Looks like you're bracing for better times second half of the year. That's the hope. We'll track you to some of these numbers, but have a good festive season, and regards to the entire team.
You too. Happy Diwali.
All right. Well, before we get into that break, I just want to pull up a stock. HAL stock is moving higher on good volumes. Our Minister Rajnath Singh will be unveiling HAL's third Tejas line in Nasdaq today. And the newer facility will raise, I think, the Tejas annual production from around 16 jets to around 24 jets, reading an article today. So, that's the reason I think we're seeing an additional volume out there. And the other one, I think, is the new listing, Canara HSBC. It's a flattish listing. 106 is the price. I think 106 is what the initial rate as well has come. We'll get that as well up for you on the screen. But a quick note for our viewers then, as you can see, that's coming up on your screen in a short while from now. There is a money control stock score just above the line graph. Now, this is the score assigned to each stock based on money control's multi-factor algorithm. It's calculating by analyzing over 40 parameters, including both the current and the historical financial statements, the price charts, and technical indicators for every stock. Each of the individual parameters considered for calculation of the four factors. are assigned a score, which is then aggregated to arrive at an overall Q factor score, G factor score, V factor score, and T factor score. Remember, this is not a buy or sell recommendation. Any investor, viewer is advised to carry out the necessary diligence on their own or through a certified, registered financial advisor for investment decisions. Well, we'll slip into a short break. On the other side, we'll focus on the pharma sector in our special segment, Quarter Se Quarter Tak. We'll have Sayan Mukherjee of Nomura who will be joining in as well. Stay with us.
Welcome back. Markets, I think, have slipped a little bit, but not by much, about 10 points lower. So the high today has been, actually at yesterday's high, 25,625 was the high yesterday. Today is 25,623. So just about there, and then there's a bit of a pullback which is taken place from that particular level. 1,400 stocks are lower, about 1,300 stocks are higher, so it's basically on an even keel without too much change. Lots of new names, by the way, in the mix, which were not there in the morning. So I'll just name the new stuff, right? Adani Power is now the biggest volume-led gainer as far as the NSE is concerned. You've got Asian Paints, which is up 4% now. So that's a sharp move higher, which we are seeing. And Asian Paints, by the way, 2-3 days back from 2,300, it's moved up to 2,500. So that's a fast-paced move. Share India, I highlighted, with a 9%. It's the third largest volume-led gainer right now. Two new names into the mix in terms of top volume-led gainers. HBL Engines, 3.5% on it, $950. Very large volumes on HBL. And look at MTAR Tech. I mean, it's a company we've spoken to recently, and they put out that guidance. Oh boy, what a month it's been having. 20% after a 30% month, which was the previous month. So MTAR has done very well. There's other stuff as well. GM Breweries has been doing very well. Force Motors, we were discussing with Hiren Ved earlier. Force Motors is up 4.5% right now. There's a company called Crizag, one of the few listings recently which is way below the issue price. So 8% higher on that one. So lots of stuff moving, and I'll address more in a bit. But it's time for our special segment, Quarter Se Quarter Tak, and today we put the focus and spotlight on what the expectations are from the pharmaceutical space. Ekta is standing by with exactly that. Ekta, over to you.
Thanks for that. Well, overall, let's start with the domestic pharma segment, where growth is expected to be around 10% on a year-on-year basis. Companies are likely to see a 50 to 200 basis points impact from lower primary sales following GST revisions in September of 2025. Chronic focus players like Sun Pharma, Torrent and Zydus should outperform, while acute heavy players like Alchem, Mankind could see softer growth. For US generics, expect overall US sales to remain flattish Q-on-Q due to lower contribution from the anti-cancer medicine Revlimid generic across Dr. Reddy's, Aurobindo, Cipla and Zydus. guidance, alongside continued base business price erosion. This should be partly offset by traction in key products such as respiratory drug Spiriva generic and kidney drug Lynarc for Lupin. Now, bladder control drug Mybetriq generic, which is basically for Zydus and Lupin, and new launches like the cardiac drug Entresto for Alkem Torrent and Dr. Reddy's, and the blood thinner drug Zalretto for Aurobindo and Lupin could be in focus. Now, Cipla could see a decline Q&Q in the US due to flattish lanreotide sales and albuterol sales. For Biocon, you're likely to see around a 14% growth in core biosimilar sales. On the operating side, higher R&D and SG&A investments coupled with pricing pressure in the US are likely to keep EBITDA margins largely flat. Stock specific, watch for Sun's traction in specialty products with a focus on Lexelvi launch, color on impact from the announced tariffs on branded pharma, Lupin commentary on competitive landscape for tolpraptan, and Dr. Reddy's launch plan for semaglutide in Canada and Aurobindo could be something that could be watched for. Within APIs and CDMO, watch for high single-digit growth led by Divi's, Loris and SciLife, while Syngene and Piramal Pharma could post muted quarters this time round. Well, back to you guys to take the conversation forward with Sayan Mukherjee.
Okay, all right, Ekta, thank you very much for that. So that is a quick perspective on what the expectations really look like as far as pharma is concerned. Sayan Mukherjee is now with us, Head of India Equity Research at Nomura. Sayan, good morning. Great to have you with us here. Happy festivities, happy Dhanteras and Diwali to you and your team at Nomura and your loved ones as well. Thanks for joining us this morning. I trust you heard Ekta's crisp explanation of course, what the preview set looks like. What stands out to you? What's the broad sort of overlay as you look at these earnings, analyze these numbers in the space, Sayan?
Thanks, Prashad, and happy Diwali to you, your team, and the viewers. This quarter is a bit unique, I would say, in the sense that there's just too much of volatility and disturbances, if I may say so. So the numbers per se may not really convey much. And I think people would sort of look forward to some of the expectations, which Ekta had outlined. I think the key issues that we would be dealing in this quarter is slowdown in India because of the implementation of GST. Many of the large companies tend to book their sales a few days before the end of the quarter. And to that extent, since the GST got implemented towards the end of September, one could expect, meaningful slowdown, I would say, in the month of September, which will sort of get reflected in this quarter. But that should reverse as we go into the next quarter. And the other issue is around generic Revlimid in the US. Most of these large Indian companies, they have contribution from Revlimid, which is now coming to the fag end of the exclusivity period. And therefore, we should brace for some decline. And I think most importantly, what it means, because generally the street believes that Revlimid is a very high margin product. And if that starts to decline, you could see that manifesting into margins, lower margins. So I think that would be the key to watch out for as far as this quarter is concerned. But as I said, it's a transitory quarter, and a lot will depend on what the guidance, or the company talks about the future Q3 and Q4.
All right. Hi, Sayan. Good to have you on the show. This is Nigel on this side. I was just recalling what you said in our earlier chat in January, and it seems, you're pretty much on the money. And I say this because you were saying be very stock selective. On the Nifty, maybe, low single-digit returns is what you're going to be looking forward to. Consumption could get a boost. That has well happened. And the last point I think you made was focus on some of these, quick commerce plays and, some of these platform plays. And they as well have done well. So you've had a good track record this year. But from here on, what do you feel about the markets? You've gone through a bit of a time-wise correction. We have lagged our peers, emerging market peers, the global market party, and most of the asset classes as well. Do you think with the fiscal, monetary policy support that we have got, maybe things look up from here on? Earnings as well could pick up.
Yeah, absolutely. I think, late last year, I guess, given the valuation and the growth headwinds, I think that was probably easier call. Now, of course, a year has passed and India has underperformed. I think we should see some improvement definitely in the third quarter, driven by consumption, the GST cut, and there are other factors as well, right? The inflation is low. We have seen, money traction in consumption has already started to factor in a meaningful way. I think the key would be the sustainability of that strength going beyond the festive season. How much of that strength continues and whether it sort of kickstarts a stronger economic cycle. I think that is still not very certain in the backdrop of several uncertainties, particularly on the global front, that we continue to face. And unfortunately, things haven't really settled down yet, and we still are grappling with significant amount of uncertainties from the global side.
Sayan, well, I'm just going to toss it back to the conversation on pharma, and I'm going to ask you about what your thoughts are with regards to what's taking place in the US now when it comes to this entire tariff situation. The branded pharma drugs seem to probably be more impacted. We've heard positive noises that, the generic pharma is probably unscathed at this point in time. Do you think that Indian pharma is now out of the woods?
So we can't say it's completely out of the woods, but I will be in the camp that it would be difficult for the generic companies to be tariffed, at least at a very high level. And if you see incrementally, the noise that has come from the US does suggest and give us confidence. I think there is statement suggesting that the Section 232 investigation is not thinking about tariff on on generic pharmaceuticals. That's one. The Trump administration has talked about strategic reserves and also giving some sort of priority for filings which are done out of the US. I think the broad objective here seems to be there is today a over-dependence on imports as far as pharmaceuticals is concerned. If they can get some bit of an ecosystem established, that's enough. I mean, it's very difficult for generic manufacturing in large scale to move to the US. And actually, Indian companies does add significant value because of cost, quality, and therefore I don't think the US would like to completely create or try to sort of completely change that, particularly in a complex sector like pharma where it takes years to establish supply chain. So I am getting more constructive as far as generic pharma space is concerned from a tariff perspective. As far as brand, as you said, yes, I think that's a little bit more challenging. But most of the Indian companies, except for Sun, who has presence on the branded sides, most don't have. And I think going forward, the fact that the US is talking about lowering drug prices in the US, and probably we'll see an increase in prices in Europe. So that also changes the geographic dynamics as far as branded medicines are concerned.
Okay. What is your opinion on, the entire CDMO space? Do you think that's, a space you would be interested in, something that you're recommending to your clients as maybe a longer-term beneficiary of, say, the China Plus One?
See, CDMO theme, I think there is definitely a truth to the narrative. I think people are looking at diversification, whether, you have a Biosecure Act in some form or the other. But I think the companies in general, the innovator companies are looking at alternatives, and India is clearly a beneficiary of that. Now, I think like in many pockets of the market, I think the narrative is very strong, and that's already reflected in the stock prices and very high valuations for many of these stocks. And and therefore, we may not really see immediate returns here. And many of the companies would have to go through an investment phase, whether it is in technology, whether it is in manufacturing setup, so that we can really compete with China effectively. And I think we would see a significant amount of investment in the space. From a long-term perspective, if you're thinking 5 years as a horizon, I think this space does provide a lot of opportunities because there are many small companies which are going up quite rapidly. But in the very short term, in the near term, given the run up in the stocks and valuations, one may not, expect a lot of return immediately.
Sayan, thank you very much for that. Ekta, thank you very much for taking us through that conversation as well. Really appreciate your time here, Sayan, and good to get that. Well, the market, I think, is back up, but it's, 20 down, 30 up, that kind of session so far, but it's still very, very early days, the first 40, 50 minutes. Sudeep Shah is with us with a quick view on price action. Sudeep, good morning, and, wishing you a happy Dhanteras and Diwali. What's the call?
Good morning, Prashant, and wishing you and everyone at CNBC TV18 a very, very happy Diwali, and all our viewers also. Prashant, what I feel is last 2 days price action is speaking everything as we are entering into this festive season. Markets have also cheered, and 25,400, 25,350 in all our previous discussions, that was that zone which we wanted Nifty to cross, and then we would see a big move on the upside, and that is exactly happening. And one important thing of what we are noticing is that although the mid cap side of the market has not moved yesterday, but the large cap stocks have reacted well, and now we feel that 25,400, 25,450 now will become a base for the markets in the coming few days. Until this is held on the upside, 25,800, 25,900 levels can be witnessed in the next week. From the bank Nifty perspective, 57,100, 57,150 now becomes an important support on the downside. And with the kind of momentum and strength that the banking stocks are showing, I feel 58,000, 58,300 can be witnessed in the next couple of days. And we all know that it's a result heavy weekend. So I guess that is the reason I feel that banking stocks are going strong into the results.
Got that. In terms of specific ideas, Sudeep, what do you have?
A couple of them. One is from the defense space. Today we have seen the defense stocks breaking out on the upside, HAL, BEL. So we like BEL more amongst all the other stocks, and 415, 416 is where BEL is trading at. It is at its breakout point. On the downside, 404 now becomes an important support. So till 404 is held, we feel an upside up to 440 is on the cards on BEL. The second stock that we like is from the large cap space. That is Bharti Airtel. This stock also has given a breakout on the weekly charts and can be bought with 1930 as a stop loss on the downside with 2100 targets on the upside.
Got that. Sudeep, thank you very much. Good speaking with you. Enjoy your weekend and festivities. Thanks very much for joining us. We come back in just a bit from now. And we put the focus back on the commodity space, which I think is really on a tear, especially precious metals, gold, silver ETFs once again making a big move this morning. Manisha coming up with that in just a bit. Okay, welcome back. Commodities in focus, and Manisha is with us in festive attire. Manisha, good morning. Gold and silver, unstoppable run.
Oh, well, yes, I wish I could talk about something else, but it is gold and silver which continue to make headlines. So take a look at the gold prices. Every single day when you wake up and the Asian markets are nearly $30 to $50 to $60 on the higher side. As you can see, we still are trading $40 on the higher side. 43.80 is an all-time high that we have seen happen in case of gold prices. It has been one very, very strong run. We started this year with 26.50. We are trading at 43.80 right now. So, yes, it has been a 62% of a jump up that we've seen happen in case of gold prices there. And with that, it's a 64% of gain as well. Various new factors that have come into the market which are supporting is the U.S. credit market concerns. Well, remember, last 24 hours, this is what has been on the street's mind. And this has led to a decline in the global equities as well overnight, whether it has been about Europe, U.S. markets closed lower as well. And that in turn also seems to be supporting gold prices. And then you have U.S. and China trade concern. The rhetoric from both countries does not stop. And that does well for the bulls who are into the gold markets right now. It also is about the prolonged U.S. government shutdown. Until that continues, why would you short gold? And that's exactly what the markets are doing. The U.S. Fed rate cut expectations when that meeting happens on 28-29 October is almost factored into the prices right now. With the kind of run-up that we have seen in case of gold, if you look at the overall global market cap of gold, that now stands at a tall $30 trillion. We've seen a very strong run-up come in for this one. But the one question that everybody is asking and talking about is, on where is gold headed from here? And that's exactly what we have for you in the next plate here. So you have Societe Generale Bank of America talking about $5,000 an ounce in the next year. That's exactly what the latest report from JP Morgan also says. Goldman Sachs as of now says 4,900. But remember, we are still talking about 2026, and these targets can perhaps change. For this year, by the end of 2025, the targets were for around 3,500. We are trading at 43.5 right now. So 5,000 by end of 2026 is what we're looking at. So clearly, even with this run up, the banks and brokerages believe that it is going to be higher highs from here on as well. Take a look at some other banks as well. Blue Line Futures talks about 5,000. Stancy is talking about 4,500 as an average. So clearly, they expect higher prices there. And then ANZ is talking about 4,600 by June 2026. The second half of next year perhaps could be slightly different depending on how things change when it comes to tariffs, geopolitics, US dollar index. So there's plenty to watch out for. And I have saved JP Morgan for the end because he's talking about, Jamie Dimon clearly has talked about 5,000, 10,000, take a pick kind of a conversation. So clearly we are looking at very, very bullish gold prices there. And then you have silver trading at a record highs on your screen. It has been 0.5% of a gain as we started Asian markets today for this one as well. For silver, everything that is about gold is working for silver. And in addition to that, you have seen, prices rise by 85%. So it's outperformed gold on a very, very strong basis there. And then you're looking at a global supply crunch that's fueling a historical rally here. There is a silver squeeze happening in the international markets. The US and China trade concerns, almost everything is supporting silver. And at this point in time, it is 50% of silver usage that you're seeing in industrial markets. So that is something that you don't have a proxy for. And with the deficit, very, very supportive. So while we're trading at $54 an ounce right now, Bank of America, ETO markets are talking about $65 an ounce by next year. SD Bullion talks about 75. Motilal Oswal came out with a report yesterday. They're looking at 55 on an average in next year. And for the Indian markets, Motilal Oswal says that you could be looking at prices of 2,40,000 rupees by next Diwali. So that's the kind of bullish cue still continuing when it comes to gold and silver.
Well, dazzling moves there, Manisha. Thank you very much for that. And that's a topic we continue to sort of focus on for the rest of the day and as we go into Dhanteras tomorrow. Thank you very much, Manisha. Well, we'll take a quick commercial break here. Latha will connect with Ajay Kumar Srivastava, Managing Director and CEO of Indian Overseas Bank, to talk about their second quarter numbers. That's a conversation which follows in just a bit from now. Stay tuned.
Welcome back to Earnings Central. Indian Overseas Bank, or IOB, is one of the first PSU banks to announce its second quarter numbers, and it has set a standard that should be very difficult to beat. An absolute standout set. Contrary to expectation, margins have risen by 17 basis points over the last quarter to 3.21%. Credit cost, or the money you set aside for bad loans, has actually fallen sharply by 31 basis points, and now credit cost is just 1.06%. Profits are up 58% year-on-year. Advances are up 21% year-on-year. Only deposit growth is a tiny disappointment at 9%. To take us through whether these three themes, loan growth, margins and low NPAs are sustainable in the coming quarters, I have with me the Managing Director and CEO, Ajay Kumar Srivastava. Mr. Srivastava, thank you very much indeed for joining us. Festive greetings to you for Diwali, and congratulations on a good set. Let me start with the margins. Most banks are going to continue to suffer a curb in margins because of the repo rate cuts. How come it hasn't affected you, or how come your margins have already bottomed out?
Yeah, in fact, reduction in repo rate was anticipated, and almost 9 months before, we started proactively to address the concern.
Okay.
It's not the numbers which we have shown and the increase in the margin NIM.
Okay.
It's not overnight, over 9 months of meticulous planning.
Okay.
And successful implementation of the strategy has resulted in that. And this 3.21 also, that is global. If we take domestic, it's 3.35.
Oh.
Quarter on quarter and year on year, we have been able to protect margin. June was, of course, we have not been able to do.
Okay.
But increase in interest income, increase in quality credit, and the more importantly, the focus on good pricing.
Okay.
We have been very selective and lending to those entities only where pricing is good and quality is good.
That's very good to hear. There will be possibly one more rate cut in December or February. That is the expectation, because inflation is surprising on the downside. The governor himself said in the press conference that there is space to support growth. If that is a cut, what is your guidance on margins? Will you continue to rise or keep your domestic margin stable at 3.35 at least?
Yeah, we are pretty sure that it will be around that, 3.35, between 3.32 to 3.35. Plans are already in place. About 9 months before, our total credit portfolio, 60% of that portfolio was repo linked, external benchmark linked. And over 9 months, we have very consistently shifted to MCLR-based lending. And it's not as if that
Now, what is the percentage? Now, what is the percentage of repo and MCLR?
9 months before, it was around 60%. Now it is around 46%.
Okay.
Last 9 months, whatever we have lent, that mostly we have lent on MCLR based.
Okay.
And it's not as if the impact of repo cut will not affect MCLR, but as we all know that it happens with a lag.
Yes.
And accordingly, deposit rates also in between get repriced.
Oh.
So the margin we have been able to protect, and going forward also, if any rate cut happens, we are pretty sure that we will be able to maintain at that level.
Okay. What about deposit growth? I mean, that is the only fault I can find in an otherwise perfect set of numbers. Your advances are growing at 21%. Your margins have grown your deposits have grown at 9.1%. So the credit deposit ratio has gone up a bit towards 80. You think you will be able to, up your deposit growth? What is the target?
Yes, see, the growth in deposit has to be seen in one particular factor, that the composition of deposit at IOB, it's not bulk deposit based.
Okay.
If you look at the numbers out of the total bulk share in total deposit is only 5%, 17,000 crores.
Okay.
Out of a total base of 3,30,000 crores. Okay. Meaning thereby that 95% is CASA and retail term deposit, which is very stable.
Okay.
If we want to increase deposit, of course, every day we can go for aggressively for bulk deposit. And that deposit growth also can be shown at 13-14%. But very consciously, we are not focusing on that. The focus is on retail and CASA and that organic growth. And without any additional focus on bulk, we have been able to grow at 9%. Okay. CASA is also growing year on year. If you see, CASA has also grown. Okay. And then we are pretty satisfied with that.
Okay. Your retail advances, there is a lot to agriculture, and of course other retail. Would you worry about any likelihood of slippages? What is your unsecured loan percentage as well? We don't have that number.
We don't do unsecured lending as much. It will be less than 1% only if we look at the total portfolio size. And last 2 years, if you see every quarter year, the slippage ratio has been around 0.11, 0.12 like that. We have been one of the best performers as far as slippage control is concerned and slippage ratio is concerned. This quarter also it stands at 0.11 only.
Okay.
And we do not see any stress whether in agriculture book or MSME book as a product as a whole. Individual cases may be there, but systemically we do not see any stress.
Okay. You indicated that you all are moving to the new tax regime by the third or the fourth quarter. Can you tell us what that will mean to your ROE or earnings? What will be the impact on the P&L and balance sheet?
Yeah, P&L, once we shift there, in fact, we have delayed the shifting to new tax regime only because we wanted to protect P&L. We never wanted that it's going to adversely affect that. So we delayed it. Now we are in a position where in Q3 or Q4, even if we shift to a new tax regime, there will not be any impact on P&L and we'll be able to smoothly shift to new tax regime.
Okay.
That is why it has been delayed by almost 1 year. But Q3, I think most probably will be able to do that.
Will there be some positive impact on ROA or something? I mean, as it is, you've done very well in your ROA from 82 last year, 82 basis points. You've gone up to 1.2. That's a very big jump in ROA. Will that be protected?
Yeah, it will be protected, and it will further improve also.
Okay. Again, I'm trying to find some faults in your results, which are otherwise very good. EPS growth, that's the one that disappoints. I mean, if you look at your price, given the earnings, which is less than ₹1, your EPS, your PE ratio looks very high at about 60 times. What is the EPS forecast you can give? I mean, your profit is doing well. That's why I'm asking.
Yeah, it's very difficult to comment on that. What I can say to this is that our job is to give good numbers, generate good profit, generate good numbers, a good balance sheet we are supposed to give, which we have been doing consistently over the last 2.5 years.
Did you hear anything? Yeah, sorry. Go ahead, please.
And beyond that, we do not have any control on other factors. That is what I wanted to say.
Okay. No, I'm just saying if there is any EPS forecast or guidance that you have in mind.
No, we have not thought of that.
Okay, Mr. Srivastava, did you hear anything about consolidation? I mean, when you all are doing so well, the only other bank, PSU Bank, which came with numbers is Bank of Maharashtra. Again, it was a very good set of numbers. So, any consolidation talk from the ministry?
Officially, we have not heard anything from any of the authorities. We are reading in newspapers only.
Okay.
But officially, there is no communication.
Okay. What's your sense about what will be your growth engine in the second half? Will it be retail? Which part of retail? Will agri continue? It's a little worrying. Agri sometimes throws up bad loans, especially in the first quarter. So what is your engine of growth and where are your worries?
If you look at my total credit portfolio, retail, agri, MSME and corporate, all are equally distributed, around 20 to 25%. So there is no special focus on any particular area, I will say, depending on the pricing and the borrower type and financials of the borrowing company.
Okay.
We are taking a call. We have grown in retail also, MSME also, agri also, and corporate. We have been, I will say that growth is almost flat in corporate. Okay. And mainly because of pricing issues, because corporates are having other sources also of getting funds. And because of pricing, we are not very aggressive on corporates. But
yeah, I can see your corporate loans are falling. It's down 3% year on year. Just a final question, any MFI loans?
Around 1,400 crores of exposure we are having. And out of that, NPA percentage is 2% only.
Okay.
And otherwise, the remaining portfolio of MFI, right now, it's working fine. Okay. And all are regular and standard.
All right. We'll have to leave it at that. Mr. Srivastava, once again, many congratulations for a great set of numbers and a very happy Diwali to everyone in your team.
Thank you. Thanks a lot. Happy Diwali to you also. Thank you.
Thank you. We have to wrap up on that note. And from all of us, the entire Bazaar team, a very happy Diwali to all of you viewers. Take a break. 4-5 coming up.